My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to make you some money. My job, not just to entertain, but to educate, explain how days like that can happen. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. News flash. Jay Powell does not work for the stock market. He doesn't care if the Dow plunges 764 points, S&P plummets 2.49%, or the NASDAQ nosedives 3.23%.
The House of Pain.
He only cares about price stability, or more specifically, the lack of price stability. And as far as he's concerned, the stock market is part of the problem. I'm not saying the Federal Reserve has a secret plan to crush stock prices. At least not any more than they had a secret plan to boost stock prices during the worst phase of the pandemic. The market's incidental and collateral. What the Fed cares about is the economy. They heat it up when it's too cold, and they cool it down when it's too hot. Right now, it's too darn hot. Jay Powell's doing everything he can to beat inflation. So the idea that the market would rally after his comments yesterday, and, you know, they were rambunctious, his comments. I know. I mean, those were angry comments, done in a sotto voce way, but it should never have rallied. What we're seeing today is the meltdown we should have had yesterday. There was some sort of bizarre delay after the press conference, as if traders were so busy shopping for the holidays that they forgot about the market until after the close. Other than a few offhand comments about how we've gotten a couple of decent inflation numbers, Powell could not have been more clear that he is not thrilled with what's going on here. That he's not just trying to stabilize prices at these levels. He wants to roll back the price increases from the last couple of years. He's not merely looking for the consumer price index to come in lower than expected. He wants it just plain lower. Think absolute, not relative. In his ideal world, he wants you to go to the supermarket and see kind of the same prices we saw 3 years ago, or at least prices you'd expect if we had only had 2% annual inflation since the start of the pandemic. And you and I, who go to the supermarket, know that's not true. He wants to see plenty of used cars selling for low prices. He wants to see those funny stick guys, the men that blow in the breeze. He wants more of those guys, you know, and they go like this and stuff. He wants vacation. He wants vacant homes, something that might be a stretch given that we heard from Lennar this morning. They're simply not building many new homes, and not many people want to move from their existing homes. I hadn't thought of this. I read the Lennar article. It's so easy to realize. They don't want to move from their existing homes because they got those incredibly low mortgages, low interest, and they'll lose them if they move. So the low houses, the lower homes are taken, which brings me back to the stock market, which is what we care. This is not used car market home. This is stock market home. Jay Powell knows the most effective way to fight inflation is by putting people out of work. But he knows he can't cause mass layoffs overnight. Other than a few people on his staff, Powell doesn't have the power to fire anyone. I don't even know if he can fire people on his own staff. But he also knows the stock market has a huge impact on how people spend. You know what they call it? They call it the wealth effect, all right? That's what we're talking about here. He needs recent retirees to deplete their savings so they'll come back to work. He needs the people who are overextended on their credit cards. It looks like the defaults are going up big to sell some of their stocks. He told us we're about 4 million workers shy of achieving wage stabilization. His biggest worry. Powell doesn't know what percentage of people have their life savings in the stock market and therefore might come back to work if stocks keep going down. He doesn't know how many workers at tech companies might need to seek other employment as their SBC, that's what the smart people call it, stock-based compensation, evaporates in value. What Powell knows is that the market's up substantially in the last decade, up enough to make it an obstacle to fighting inflation. So, yes, while he's not explicitly trying to send stocks lower, he's certainly not going to shed any tears over it. If anything, lower stock prices are a win for the Fed. Now, we spend a huge amount of time worrying about when or if we're going to have a recession around here. I get that. It's a real important question. But from the Fed's perspective, it's not the key issue. You have to understand Powell thinks strategically, not tactically. Maybe he reads the Lennar conference call and sees how few homes are actually being built in the country. He can't change that by raising interest rates. In fact, higher rates make the problem worse because the home builders aren't dumb enough to spend more on building into a series of rate hikes, at least not anymore. They used to be when I was growing up. So what can Powell do? The smartest thing to do would be to dump hundreds of billions of dollars worth of long-term bonds that the Fed has on its balance sheet, something that would instantly send mortgage rates higher. Lately, those rates have been going lower due to recession fears. If we get them a little bit higher, then maybe home prices will actually come down, and that's what he wants. But the second smartest thing Powell could do is what he's already done. Warn us that higher rates are going to come. That's better than Alan Greenspan, who questioned whether stocks were up because of irrational exuberance in 1996, right before one of the greatest multi-year bull runs in history. It wasted and hurt the credibility of the Fed. He doesn't want that to happen. These days, though, so many people have their compensation tied up with stocks that if Powell can publicly indicate his utter indifference to the stock market by taking short-term rates up so high that they're a great investment, you can presume we're going to have downward pressure and a downward pause. There's one problem with his plan. Just as Lennar's executives were ready when the stock market stalled and mortgage rates went higher, most other execs know what to do when there's a slowdown, but only some of them are actually willing to pull the trigger. The older line companies, the industrials, seem most savvy. They know a recession means it's time to hunker down. They're swift. They're brutal. It's like they're bad Santas. They're making a firing list. They're checking it off once, and then they terminate. Different story out west. See, out west in Silicon Valley, where the real crazy price inflation is, it's different. I think they don't have any idea how to hunker down. I don't know, maybe in their third vacation home, they have a little hunker down room. For whatever reason, these people are gun shy. If anything, they seem addicted to hiring more people. Why? In order to land and expand or create moats or dominate the total addressable market, whatever gobbledygook language they can use to take your money and put it in their pocket. They know they can inflate their earnings or lack thereof by paying people in stock. I think Silicon Valley is in denial. They don't want to acknowledge the new reality that their businesses are much more fragile than they thought. So it's time to start husbanding cash. See, it turns this is what's really amazing. A lot of these digitizers are more geared to advertising than people realize. Or at the very least, they all thought advertising would move online, creating a perpetual bonanza. I don't know a soul out west who believed that the ad business was cyclical, even though advertising as a whole has always been hostage to the economy. Digital advertising used to be different, but not anymore. Many companies got so many ads from crypto companies that they thought they had a crypto annuity going on. Crypto may not be going away entirely, but I think we've seen the last of the big ad blitzes. I think a lot of the actors and big-time sports guys, they may have learned their lesson, too. Yeah, I mean, don't you, want to boo them when you see them? Anyway, then there are companies that are in the marketing or customer relations management, CRM. They're all good until their corporate customers cut back on marketing, which is what most businesses do when there's a recession. There are other tech outfits that used to dominate a niche. Amazon Web Services, Microsoft Azure. Now you got Google Cloud, you got cloud infrastructure, you got Oracle, you got Snowflake. And they've gotten, look, they're competitive. And there are dozens and dozens of companies that analyze other people's data. I have to tell you, if I hear one more company that says, you know what, we have a proprietary way to analyze their data, I mean, enough! We only need a couple to do that. There's really only one at private equity firm, Thoma Bravo, that seems interested in even acquiring these cloud players. Now, it wouldn't matter if all these tech companies only amounted to a hill of beans, but they actually make up 26% of the S&P. Forget the NASDAQ. It's riddled with them. And they ain't recession at all. They're recession irrelevant. Bottom line, when you add it all up, investors have to learn that the Fed is not your friend. It's not your pal. If anything, it's your enemy. At least until Jay Powell finally beats inflation, and then we can all be friends again. How about we go to Clyde, Michigan? Clyde.
Hi, Jim.
Go ahead, Clyde. Clyde, what's up?
First-time caller, long-time listener.
Okay.
I was hoping you could give me some advice on Generac Holdings, GNRC. They're
I'm
really
going to tell you
big
why I'm worried about Generac. See this new Ford Electric 150? What do you need an extra? What do you mean? What do you need a backup generator for? When an F-150, you plug it in, it can light up your whole darn house. I say out with the Generac, in with the F-150. All right, it's time to realize the Fed is not your pal, buddy, friend anymore. If anything, it's your enemy. At least till J. Powell finally beats inflation, and then it'll be kumbaya. Oh, man, money tonight. Going once, going twice, sold to your portfolio. I'm sitting down with Richard Brothers Auctioneers to see if this can be a strong under-the-radar machinery play. Then, we're continuing our top-notch series with the sectors of the year that I like, closing out with the healthcare space. I'm revealing 3 stocks that I think could have a pretty good year. And in a market like this one, is it time to circle back to a company that is a database company, one like S&P Global that people don't understand? I'm checking in with their CEO. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.